It's UPBOptionMillionaires.com. Thursday, December 17, 2015. Coming into the Fed meeting yesterday, the announcement of the first Fed funds rate hike since the Industrial Revolution. I was looking for that candle to the downside, and we got that right out of the gate. A recovery and then a continuation of the rally. You can go back to the post from earlier this week and also from the weekend. We hit support. On Monday was a pretty dreadful day for the market early on. Recovered those losses. Look at this, though. The DAX is up big today. Continuing the move off the lows that we saw on Monday and the Federal Reserve announcement yesterday. Where are we headed here going forward? If you look just from a shorter term perspective, you start the month of October pretty bearish, but we had a nice rally. That rally continued into the middle of October and the end of October, and then we had a pullback. And that pullback ended in the middle of November. We rallied up to the start of December, pulled back to the middle of December, and here we're starting to rally again. So if you look here just from a chart perspective, resistance for S&P 500 futures lies just under 2100. We have strong support here at about 2000, and it looks like we're going to come up and hit this top trend line. Are we going to break out to the upside? That's something to be seen. Of course, seasonality tells you that December is just a great month towards the end of December to be long the stock market. Look at the U.S. dollar index. Initial reaction was to the downside, but we're starting to rally again. And again, this is something to look for in 2016. As the U.S. dollar index starts to gain value, levels it hasn't seen in over 12 years. And you can see the parabolic move we've had to the upside in 2015. Now a consolidation phase is finally broken out. We came back just about to test trend line. Former resistance, now support. We're starting to bounce. We're going to get it back in the triple digits, which is going to weigh and continues to weigh on crude oil. Everybody loved to call the bottom on crude oil. Oh, here it is, here it is. And I continue to point out the 20-year weekly chart that is showing the breakdown. If you draw a trend line starting back in 1999, probably like it's 1999, draw a trend line all the way across. We clearly have broken that. And look at this. This actually looks pretty dreadful here. For a move back under 30, wow. And that's going to be great for the consumer, but it's not going to be great for energy stocks because they're going to go belly up. And that's why you saw high yield debt going bonkers, because a lot of the high yield debt is for energy names. Also, Apple is a chart I brought up many months ago. And you can see the consolidation phase that we had here from September all the way to this month. Well, guess what? We're breaking down, and I called for this quite a while ago that this topping pattern was going to play out. And you see the breakout of it to the downside, but I think we're going to come back up and test this former support line, now resistance, before continuing to break down for Apple. You can see yesterday we broke under the 109 level briefly. I said, hey, if we get to 110, it's going to be very bullish short term for Apple. So I got into some 112 calls, 41 cents. Those are going to look pretty good here, as they're going to be in the money when the opening bell rings. The bell rings for Twitter. You can see the support at 24 that it's seen recently. A couple breaks below it, but each of those breaks below it for Twitter under the 24 level has instigated a bout of buying pressure. You can see the support here at the 24 level. We get a bounce. Look at this. I mean, it's just been a precipitous fall for Twitter since 2013, up near $75 to start the year. Has been pulling back some really nasty moves post earnings. This is the line I think we're going to come at least up to kiss at $35 for Twitter. When and where and how, that remains to be seen, but bullish on it until we get up there. And GoPro as well. A lot of negative pieces on GoPro now recently. You didn't see the negative pieces up here, or even back in the summer when we were at about $70 a share. No, you see it down here. It's like, hey, this stock, they weren't bearish on it when it was $95, when there was, look at it, $70 a downside. Now when there's maybe $3 or $4 a downside, all the analysts are bearish. Like, here, short this stock for that $3 of downside. Whereas you could have really shorted it up here and made a lot of money to the upside. That's why I think the risk here is actually for a bounce. The name is heavily shorted, remains to be a stock that the analysts and even the blog writers on Seeking Alpha love to talk negatively about the stock. The most recent one talking about the buyback. Back in November when they announced their earnings report, the stock fell. The company announced $300 million worth of a share buyback program that really at these current prices would amount to almost 15% of the outstanding shares, which would still be half of the money allocated to the shorts. If you look, 31 million shares for GoPro is short. So do the math there. It's a lot of money. Over $600 million. So any kind of short squeeze here, and of course heading into the year, and people are going to be locking in profits. If you're short a stock and you want to lock in that profit, you actually have to buy back the stock. Let's look at a couple other charts here. Macy's really been beaten down. It hit a new 52-week low. And if you look here from a 5-year chart perspective on Macy's, wow, we broke through support here, 38.38. And if you go back here to the 35 level, we have another tier of support. We're certainly oversold. Look at this. We have not been oversold like this for Macy's. I'll have to go back. Let's go back 10 years. Macy's starting to pull back to levels of oversold that we haven't seen since the financial crisis of 2008 and 2009. Look at this. You know, it's 1, a 2, a 3, a 4, 5 straight months of downside. It's down over 50% from its early 2015 highs. So I'm playing just for a bounce. Not saying that the recovery's in and it's going to head back to $70. We got $1 or $2 here, and you're in the 36.50 calls. You're going to make some money there to the upside. So that's what I'm looking for Macy's. Let's look at RIG, because RIG has been beaten down again into 1250 calls earlier this week on Monday when everybody was so fearful about this marketplace. When you just look at Monday, we're down to 1230. 1230, look at a recovery, $1.50 to the upside out of most of my RIG calls, but I think this is putting it at a bottom here. Remains to be seen here with some of these energy names, though. Very bearish sentiment. So if you look at RIG, I mean, look at the potential move to the upside. $20 would be the first target, and we're about $7 away from that. An analyst came out recently, upgraded the stock, put a target of $19.50, said buy it. So we'll see if that analyst is right, but it's been a really tumultuous last 5 years for RIG. FCX, you know, came into 2015, said, hey, FCX is going to be the CLF of 2015. I've been talking about FCX for many, many years now, especially this beautiful head and shoulders topping pattern, which did not come to fruition right away. Look at this. We came to the neckline in classic fashion. Here we bounced. I said, hey, no, not now. Not when you're fully positioned for the move to the downside. No, we're going to bounce for a year and a half before we come to that move to the downside. Look at this pattern here. Beautiful bear flag. Hit lows that we have not seen since the financial crisis in 2008, 2009. The irony is, back then, they announced a dividend cut, suspension of the dividend here. Also measures to shore up their finances, and the stock rallied over 600% here for Freeport here and FCX. Same thing here. They announced it just recently. They're just suspending the dividend. They're going to look at their expenses. Is that a time to get into the stock? We'll see. Time will tell. Carl Icahn's still got a stake in here, so anything is possible. But if you were looking to buy the stock up here and here and here and here, this might be a time to get in for at least a bounce into year's end. Maybe get up to 10, 12.50. Do I hear 15, 17, 17.50? So FCX, something to look at here. Tesla, the bears remain out, trying to chomp this one down. Beautiful consolidation phase. Look at the support. Well respected here if you draw a trend line across these recent lows. It goes all the way back to the start of 2015 to start of 2014. Support is held, and it looks poised here. Could you believe this? If Tesla breaks out to new all-time record highs, put us over $300. Wow. The bears were out yesterday, but still up 6% because SolarCity, an Elon Musk name, breaking out. Look at that candle, folks. JB at optionwinners.com, all over this, talking about the massive short interest. And if you added up all the shares, this did not make any sense. A lot of shorts that need to cover. Look at this breakout. We had over 34% to the upside. Although the one thing to watch, starting to get a little bit oversold. Of course, stocks in motion can stay in motion long past being oversold. Tesla, SolarCity, looking sharp. Look at the bond market. Bonds, you would think, would be pulling back here because Federal Reserve is going to raise the funds rate, which is going to make bonds a little less attractive. But here we hit support here at the 120 level. This morning, bouncing up over 122. And we poised for another break to the upside, heading into year's end for TLT, the bond market. Look at this beautiful pattern here. Prices are coming together, so we're setting up for a sharp move in either direction. Is it going to be back to retest the highs of 2015? Or are we looking for a breakdown under 100? I think either is a likely scenario here. I love being that ambiguous commentator here on the market because you're never wrong. I'm never wrong. Unless it goes flat. Now, if the bond market stays flat for the next 3 months, I'll be wrong. That's great, isn't it? All right, finally, let's look at SPANG. Amazon continues to break the upside. Look at this. In spite of the weakness that we saw last week and early this week, breaking out here almost at record highs for Amazon. It's got to break over the 682 level. Google, same boat. Look at the breakout here. Google is breaking out to the upside. Facebook recovered its losses. And we have Netflix coming back. Netflix probably the laggard here in spite of its move. So, all right, UPB, it's 10 minutes here. We've got 2.5 hours before the opening bell. I'll see everyone's going to be a great trading session just like yesterday and earlier this week. Let's see if we can get a little bit of bounce here for some energy shares. Maybe crude oil bounce a little bit here. That'll continue to fuel gains for the marketplace. I'll see you in the chat room. Have a great day. Goodbye.